The only difference between inflation and hyperinflation is trust. And nobody knows when that trust is going to be lost. I don't care. They have textbooks, right? In the economics textbooks, they'll tell you hyperinflation is 50% month over month. You cannot mathematically define hyperinflation because it's different across all the different examples we've seen from Rome and Greece and Weimar Republic and Venezuela and Argentina. The only thing that's the same is that they entered into hyperinflation when the people lost trust. That's why this, I think this election is so important, because we're either going to clean house and help to reestablish trust, or trust will continue to be abused. And at some point in time, when that trust gets, and I think it's safe to say that BRICS has probably lost that trust, right?
Yeah,
BRICS
I was thinking the exact same thing. BRICS is telling us they've lost the trust, and this, you can see it in the gold chart.
Yep.
And yeah,
absolutely. They're all of their, see, we have deficits when we do trading. They have surpluses. All of their trading surpluses are going directly into gold. They're not going into the government bonds anymore, because the real rate of return is negative. So I bet you if the United States if the federal government issued a Bitcoin bond, the other governments would be chomping to get at the bit, because they want to be able to get that exposure. And if we embrace gold, I just had Daniel Diaz of Citizens for Sound Money, great guy, great lobbyist, doing a lot of God's work, getting us back onto a sound money economy. But he's heavy on digital gold. But the thing is if we remonetize gold, we are now empowering BRICS, who's been stacking gold ever since we've weaponized the dollar, right? We came out and we said, you do this, we don't like it. Now we have confiscated Russia's money and then used it to finance Ukraine. That is why they're moving away from us, because it's not their money, right? Not their coins, not their money. It's not their money. It's the United States sanctioning them out of the system, weaponizing the money system, and now they're going back into gold. So we've kind of taken that choice off the table. I think before COVID, the United States could have repriced gold and tried to balance our balance sheet. But now if we try to reprice gold, we're just making ourselves poor relative to these other nations who have been stacking gold as a consequence of us weaponizing our own system. But it's also a miracle that BRICS went with gold instead of Bitcoin, because it leaves the door open for a Trump or for an RFK or for a sound money advocate or a pro-human person to come in and say, you know what, we're gonna integrate Bitcoin.
Yeah, that's a great point, because so when I think about this evolution of Bitcoin to becoming a world reserve currency, I think you're saying the BRICS move to gold first because they're not incentivized with their political structure, to empower their people. The United States Constitution, if we get back to it, is the only governing document that is about empowering the people and giving the people property rights. And so to me, that lays out a framework by which the US government could implement a Bitcoin standard before anybody else in the world. And if the world's leading empire implemented a Bitcoin standard, the rest of the world would have to follow. And this sort of, I think, is often explained as like the global hash war that could be coming, that they say is coming. You're starting to see small states like El Salvador embrace it. Maybe Argentina is going there now. We've had small countries start to get into mining. I know Saudi Arabia is getting into mining. Bhutan has been mining without anybody knowing. They've got close to $1 billion in Bitcoin, and but all these little guys are looking to the future. And if we could realign ourselves with the Constitution and realize that Bitcoin empowers our people, we would all of a sudden re-emerge as the empire that's leading a pro-humanity movement across the planet. I mean, to me, that is so powerful and so important that every time I hear people in government, regulators, politicians, and the likes complaining and demonizing Bitcoin, it's like, man, you guys are just so far off the mark. You're so far away from the constitutional principles of what made this country great, and Bitcoin is so aligned with that that you just have to step back and look at it. And this is, I think, what impressed me so much about RFK at the Nashville convention is that you could tell by the way he was talking about Bitcoin that he was down the rabbit hole, and he was looking at this protocol as a pro-America vision for the future. And it was so exciting and hopeful. I thought his speech blew Trump's speech out of the water. I mean, he was phenomenal.
Yeah.
And so it was very hopeful for me when I saw him become a part of Trump's campaign, right? Because like, man, there's somebody there now in the cabinet that really, truly understands Bitcoin at the deepest level. And that was, that's just inspiring to me.
Yeah.
It's hopeful.
I mean, I think the future of the American lifestyle and way of life is really at stake here. And the problem is that even if you get an Elon Musk and a Ron Paul in there with the Doge, the promise
That's not
is
the coin, by the way.
The Doge. Yeah, no shit coins. Department of Government Efficiency, right? It's a play on. It just happened to work out for him that way. That's Elon does that, but it's genius. And if we get a Ron Paul in there and we get Elon in there, like I said, I think we can find the fraud. But the problem becomes with the spending. So we're $36 trillion in debt. We're $219 trillion of unfunded liabilities. In other words, yeah, we're 36 trillion in debt, but we've promised to spend 219 trillion over the next generation or so. So you can't cut spending enough in order to stop the inflation. And the excuse for this, when you talk to the traditionalists, is, yeah, but we'll get out of it because of the growth of the economy. But the problem is, for every dollar that we're borrowing and spending into circulation, causing inflation, we're getting less than $1 of growth. So the real rate of return is negative. So we cannot spend our way out of this. We cannot grow the economy fast enough to outpace the growth of our liabilities. So I find hope in the fact that Trump is a businessman and a builder and understands the balance sheet and understands that, you know what? We do have a lot of assets in this country. We have oil, we have land, but we're not going to sell them to close our debts, right? You have to hold them forever. So we need to find a way to increase the asset value of our balance sheet in a way that allows the asset side to outpace growth of the liability side. And when you incorporate a Bitcoin strategic stockpile, that's a perfect solve. When you incorporate Bitcoin bonds into all of these fund programs that we have that are just sitting on US government debt, earning a negative real rate of return and then expecting to last forever. Well, if it had a positive real rate of return, that might be plausible, but not at a negative real rate of return. It's impossible. It's destined for failure. So we need to embrace Bitcoin as engineered money. We need to embrace financial innovation.
The important point there is that if we were to take rates to the real inflation rate, while we're sitting on 36 trillion in debt, we would be into a Great Depression.
Yeah. Max Kaiser and myself were quoted in Forbes talking about the debt death spiral. And that's exactly what it is, because in March of 2022, they said we're going to raise interest rates. I said, if you raise interest rates, what happens is you'll make inflation worse. So did inflation get worse? Yes. But why is CPI coming down? I'll tell you why. Because the supply demand. Prices are determined, number one, by supply and demand, right? So as supply goes up, demand goes down, price goes down, supply goes down, demand goes up, price goes up, and everything in between. And that's the economy. So when the economy is hot, yeah, prices can start to go up. But what happens is, this is amazing. When the economy is hot and prices go up, cost of production for the producers goes down, because what happens is the economy is hot. They're selling all their units and they're profiting. They reinvest their profits to expand supply. And now we come back to marginal cost of production. Now, because they made so much profit, they're not just going to produce 1 million water bottles for $1 each. They're going to produce 10 million water bottles for 75 cents each. And that means that now they don't have to sell the water bottle for $2. Now they can sell the water bottle for $1.50. And they keep the same profit margin, 100% profit margin, but the price is lower. And when the price goes lower, more people can afford it and demand goes up. So when prices go up because of a strong economy, cost of production for producers will go down. Prices will go down. but GDP will go up because you'll sell more units. So you'll have more production and more consumption. And that's the definition of a healthy economy. But when prices are going up because of inflation, the producer's cost of production is also going up because there's no profit being created. The materials that producer needs to use are also going up in price. The land, labor, and materials that they need to offer the product or service are also going up in price. Their costs are increasing, and that cost needs to get pushed to the customer, and there's no increase in profitability. There's not more consumption and more production, and you have a negative economy.
So did the monetary, the modern monetary theorists ever go to economics classes? I mean, you just laid it out so perfectly and so simply that most anybody with common sense is going to understand that. But modern monetary theorists throw that all out the window, say it's impossible, it doesn't work that way, we can print money infinitum, and it's not going to impact the real economy.
Yeah. And at this point, I have to believe that because it is just such a common sense, if you could take a couple minutes to just listen to it, it's very common sense. Yeah. So I have to believe that they're lying. And I believe that they're lying because they benefit from being closest to the printer. They're the Quintillionaires, right?
Yeah,
they get to go.
Explain the Quintillion effect to our listeners that may not know what that is.
Yeah. So they like to sell it to you as trickle down economics. In other words, we're too big to fail. So print the money and give it to us, and then we'll spend it into the economy for you. And that's going to enrich everybody else as we spend it into the economy. But what happens is it creates inflation. So it actually makes everybody else poor. And then at the same time, the person who received the money and got to spend it, they got to buy all the goods and services at the lowest point before all those prices increased. And everybody else gets access to the money that trickled down to them at higher prices at a rate that was higher than their earnings. So they lost purchasing power. So the Quintillionaires, they get the most out of the money printer because they get to spend the money first on the cheap prices. And as it trickles down to everybody else, the modern monetary theorists will tell you, oh, well, it's trickling down to you. You're richer. Your wages went up. Right. Yeah, but my wages went up at 5% and inflation went up at 10%. So I'm buying 5% less stuff. I don't benefit from this money printing.
There was like a short window of time where that worked because all of our money flew out to China as we purchased goods, and they bought treasuries, which raised the price of treasuries, lowered the yield of treasuries. So we had low interest rates, so we could borrow more money, and we could that was this little mini virtuous cycle that was not sustainable. Yes. Now that you have, I think it's since 2014, most of the foreign economies that sell us goods have not increased the amount of treasuries that they hold on their balance sheet at all. Net, they're flat since 2014. But what has been growing is their gold reserves. Yeah. So now they print the money. We send it to China. They buy gold. They don't recycle it back into buying our treasuries. So that virtuous cycle of globalization is broken for a number of factors, but the primary factor where the break in the dam, so to speak, was when we sanctioned Russia. And we told the world, if you don't do what we want, we're going to steal your wealth. Yeah. So everybody said, well, we better start saving as something they can't steal. So now that modern monetary theory loop no longer functions, but they're still a proponent of it. They still believe they can get it on track. And we're saying that the world has definitely changed. It's definitely going in a different direction. And now money printing is going to immediately impact the inflation rate in the United States.
That's right. And for people who don't believe that, probably like 6 months ago, I was on a panel at the Bitcoin Energy Summit with Congressman Byron Donalds, who's actually my local representative. And he sits on the Financial Services Committee. So after the panel, I got to speak with him for a little bit. And I wanted to talk to him about treasury demand, because during the panel, he talked about stable coins and how the government feels that stable coins are actually good for treasuries because they're creating more demand, right? Tether is one of the biggest owners of treasuries. So when these other countries aren't recycling that trade surplus back into the treasuries, somebody's got to buy them, right? And we don't want it to be the Federal Reserve with quantitative easing, because then it becomes way too obvious at the rate and pace of inflation. So who can we sell these things to besides ourselves? And they're on the Financial Services Committee of the United States of America. They're talking about, number one, the lack of demand on treasuries. Number two, how stable coins can potentially provide a somewhat of a solution to that problem. So this is something that's being talked about at the highest levels of finance in our country. This is not just me and Paul saying, hey, we think it's working this way. No, we don't think it's working this way. We know it's working this way. And the officials in charge of trying to fix this problem are actively talking about Bitcoin and stable coins as a potential solution. And that's how desperate they are for this demand on treasuries, because they know how much they have to issue. We are deficit spending, and we are not collecting enough taxes in order to spend the amount of money that we're spending in our budget. Right. So, if the government were a person, we'd be bankrupt already. That's why they allow people to, it gets to a mathematical point, right? And this goes back to the debt spiral. It does get to a mathematical point where you cannot escape. And that's why the court of law actually allows a human being to declare bankruptcy, because you can get to the point where mathematically you're better off just starting over.
Right.
You're bankrupt. And that's the problem. If we raise these interest rates, here's a radical statement for your listeners. I believe the U.S. Treasury has lost the ability to create demand for treasuries by raising interest rates, because the higher they raise the interest rate,
right,
the higher the interest expense goes, right? Interest expense was a non-item not before this hiking campaign. Now interest expense is the number 2 expense on the U.S. Government spending budget. Number 2. It used to not matter. It is now more expensive than military, and is now more expensive than medical. Only Social Security is more expensive than the interest.
Interest on our treasuries.
Yeah.
Yep.
And if they keep raising interest rates, that interest price is going to keep going up. Well, guess what? We don't have the money to pay that. So we have to issue more debt. And when you issue more debt, that lowers the price and pushes up the yield. So we are in a very dangerous spot right now, where we're issuing treasuries at a time we're increasing supply when demand is declining. And whoever gets in needs to understand. And I think one of the things that Trump said at Nashville that was one of the most underrated things was he said that I will establish the dominance and expand the dominance of the dollar with stablecoins. That's really interesting, because that's Byron Donalds is close to Trump, and Byron Donalds probably whispered to Trump what he told me at the Bitcoin Energy Summit, which is we have a lack of demand on treasuries, and if we don't fix this quick, it's going to be very evident in the yield curve. And it's becoming evident now, right? The Federal Reserve has lowered interest rates. They have pivoted and lowered, and the 10-year is still going up. So what the hell is going on? Something's not working the way that everybody thought it was going to work. Exactly. Even Warren Buffett is being caught off sides right now. Mm-hmm. The yield curve is not reacting to the pivot the way that we would anticipate it to.
Yeah, and it wasn't just like a subtle mean reversion. It was a pretty significant move that we saw in interest rates after Jerome cut rates.
Yeah. Actually, I have a long thread about this on my account, because I was calling for 5% and I was wrong. I was calling for 5 and they came back down. But I this is my thought on this. I think they're defending the 5% mark, because if it goes above 5%, the banks are bankrupt.
Yeah.
Because remember, as the interest rate goes up, the price goes down. So as the price goes down, the mark-to-market value of that collateral, because remember, the banks are not just holding this in one signal account and holding their swords and defending your money. They're rehypothecating this debt throughout the system in multiple ways. They're leveraging that position in multiple ways. And the value of that position goes down as the interest rate goes up. So the higher the interest rate goes, the more systemic risk there is. And that 5% level is that key critical level. If they don't defend that level on the 10-year, then everything will unwind. You won't just need a bank term funding program. You'll need a complete buyout program. So it's now back above the 4.33% critical level. 4.335 is the critical level for the 10-year treasury based on market structure. And now they're going to have to start playing defense again. And if they don't, it's going to rip to 5 pretty quick. But once it gets to 5, I anticipate a treasury buyback program, flip the switch on quantitative tightening back to quantitative easing, and they're going to provide liquidity like they've never provided liquidity before. They're going to make COVID and helicopter money look like nothing compared to what they're going to need in order to keep this system together if they allow those rates to de-anchor. So for that reason, I don't think they're going to allow the rates to de-anchor, which means they have to print the money. And if they have to print the money, we're going to see more inflation. And if we have more inflation, you do not want to be in bonds because the yield is going to go more negative. You need to protect your purchasing power. And the best way to do that is with Bitcoin.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.